In today's video, we're doing things a little bit differently, and I'm talking about both the euro and the pound and also the DXY because I do want to show you guys across the board what we're seeing from these markets and also how the euro was actually telling you what was likely to come from the US dollar and even the Australian dollar, guys, earlier in the week that I mentioned. So we're going to talk about all of that in today's video. A lot of insights here, a lot of opportunities too, potentially coming up in March, which is nice to see considering how indecisive these markets have been. So looking at the Euro USD, we see that the market is still range bound here. We talked about this in yesterday's video. And what I told you guys, if you saw the video in its entirety, or at least past the halfway point, I was looking for my ideal scenario was a breakdown from this trend line. Okay, so you can see that from this trend line here in February, off the February low, we have on the 4-hour time frame several touches along this level. Again, we talked about this in yesterday's video. And what I mentioned there, I said if I had to go on a limb and guess what we were going to get here while the market was still range bound, I was looking for a move lower from this market and a US dollar short squeeze, which I've also alluded to since last weekend. Okay, so all week long, I've talked about the potential for a US dollar short squeeze, which we are seeing so far today. Now, this is a trade right here that I did put on today. I also shared this with VIP members in real time. So I share all of my trades with VIP members in real time, including entry, stop loss, and take profit. So I got in through here right around 1.0483. So right here, you can see where we had an intraday breakdown here from the euro before those Trump comments about tariffs in March. And this is a perfect example, guys, of, a lot of times people will tell me, well, this move right here, you only made money because of Trump, Trump's comments or whatever it might be, or some kind of news event. And I say it all the time, but technicals are going to precede fundamentals 99% of the time. If you really understand technicals, if you really take the time to study them and understand what's going on here, they are going to precede any type of news, whether it's scheduled or unscheduled in most cases. And this is a perfect example here from the euro because you can see on the hourly time frame, all of this right here occurred long before Trump made his comments, right? Trump made his comments over here. And all of this was occurring with this breakdown and even this retest before Trump even made a comment. Okay, so this is a perfect example of how the technicals were telling you what was likely to come here long before Trump ever made those comments. So I just wanted to point that out because, again, a lot of times people will look at this and they see a short like this and they say, well, you only made money because of, X, Y, or Z news event that came out. And that's not true because I was in this before those comments ever came out. So anyway, guys, I am in a short here. It is playing out well. And my first target here is going to be the mid-range here for the Euro USD, which comes in right around 1.038. Okay, so you can see that we don't have a definitive support level through here. However, this is also a mid-range. Okay, so the 50% of this range that we've seen for the euro going back to December. So I do think that buyers are going to look to defend this area. This is also a point of control. If you pull up something like visible range, looking at the volume by price, what you'll notice is that this is the highest volume point, okay, in terms of this range right through here. And so I do think, again, that buyers are going to try to defend this region here. So we probably see some relief in this area if we do get that retest here over the coming days. Now, one thing that you do have to keep in mind is that we're coming up on the last 24 hours of the month. And as I always say, expect erratic price action within that last 24 to 48 hour window of the month because institutions will be closing out their books. So you get a lot of what I call administrative driven moves versus conviction driven. So just keep that in mind that we are probably going to see some erratic price action over the next 24 to 48 hours. But all in all, guys, I mean, again, the euro is still range bound. I talked about this yesterday, how a market is range bound until proven otherwise, and how anybody getting bullish on the market up here in this area was getting bullish right into key resistance. All right, now at the same time though, and this is never financial advice, but in my opinion, if you're looking for an entry following this move, it's going to be a little bit difficult going into that final day of the month because like I said, price action can become quite erratic and you certainly don't want to chase this, especially in these conditions. Because even though we are getting a breakdown, markets have been very indecisive over the past couple of months. And so you certainly don't want to chase this, especially as the market comes into this key support area, right? So I think, in my opinion, if you're looking for a short here, what you would have to see first is a move down here into support and then see what kind of bounce we get from this area. Now, if we do get a decent bounce, you could get a pushback here toward these lows, right? Somewhere back here in this pocket. Once we get the move down here, somewhere up here in this pocket to potentially get short. Again, that's not financial advice, guys. It's just my opinion. But this is also why I like getting short or even long early in the move so that I don't have to worry about, potentially chasing a market and getting caught offside. Okay, so right now, again, we do have a nice little breakdown here from the euro. Now, let's take a look at the pound, which you can see here, we've got a few things happening. So first, I want to talk about the weekly time frame. And this is something that I mentioned, weeks ago when the market was actually breaking down from this. So you can see that you can draw from the high from back here even. So you could do something like this here, draw it off of this weekly high, right? So let me grab this trend line here, draw it off of this weekly high. And what you'll notice here is that we've got this high, we have this low through here, this one, this closing price. And you can even see through here where the pound tried to hold above this on the weekly, and then it failed, right? And I talked about this to VIP members earlier in the day. And what I said there was that this price action on the way up, this retest that we're seeing here so far looks relatively corrective on the way up. And what that often signals is that this right here is a bearish retest and nothing more. All right, now if we had seen the pound come down here and then snap right back to the level, then that would be different. But what you'll notice here is if we look at the daily time frame, all right, notice how the market just kind of took its time getting back to this level. And even the last couple of weeks, right, this price action through here looks pretty corrective to me. It's not impulsive. This right here was impulsive, but this retest looked more corrective. So the bottom line there is that it looks like buyers are running out of gas here, okay? Now, I could be wrong, of course, but it's going to depend on where the weekly closes. Obviously, if it closes like this here, then you've got a nice bearish rejection candle to work with. And if you look at something like the 4-hour time frame, this is also what we talked about in the VIP area. In fact, even on Wednesday, I told members when the pound was trading back here, right? I told members to keep an eye on this channel and that this could offer a breakdown opportunity for a pushback there toward that 1.25 level. All right, so early warning sign there for VIP members. And of course, we are seeing that follow through here so far today. Now, whether or not this amounts into an actual pullback from the pound is yet to be seen. We do have a very tentative 1-hour breakdown here. You can see where so far it does look like the pound is holding below this on the 1 hour. We've yet to see really a 4-hour close and of course a daily close below this as well to really confirm things. But again, when you look at this on the weekly though, I mean, this is why I have not wanted to get bullish on the euro and the pound. When you look at stuff like this, right, you've got this trend line that goes back years. And it's currently being tested as new resistance, okay? So again, right now, this does look like a bearish retest to me. If that's true, then we could see the pound move lower in March back toward levels like 1.25. And then from there, I think that's going to be a massive, massive test for this market. Because if you look here, okay, we've got, first of all, this key horizontal through here where the pound broke out from these highs back here in February, okay? So you can see the 1.25 is a significant horizontal in and of itself. But then if you look at these lows, you have a trend line off of these lows as well, right? So off of these lows through here, this is probably going to intersect with the pound up here in this area, right? So if we do get a pullback out of this corrective price action, if we do get a pullback down here into this area, right? These highs, this trend line down here, this is going to be a significant moment for the pound to where we probably see buyers defend this area and we probably get a bounce from the pound. However, if this were to fail in March, okay, if after a bounce, this area fails, let's say we get a retest of these lows back here, this area fails, then that could set up a move much lower for the pound back toward levels like 1.238, 1.23, etc., right? So it would put the market back here within this range. So this is absolutely going to be something to watch here, guys, over the coming days. All right, but for now, though, you do need to see the pound really get below this area here that it's testing at the moment. So right around 126.30 or so, you'd want to see a convincing breakdown below this to signal the move down there toward 1.25. And then again, I do think buyers step in to try to defend this area. But given this trend line here on the weekly, right, that could be a temporary bounce from 1.25. The only way that the pound is going to move significantly higher in March and beyond is if it were to close a high time frame above this level here, okay? So it would have to bounce from here and then close back up here above this trend line. So just keep that in mind, guys, as we go into March. Still very tight trading conditions, but it does look like if we do get the confirmed breakdown below this area here today, then we could get that push into 1.25 over the coming days. All right, so next up, guys, let's take a look here at the DXY, and this is what I've alluded to for the past week. So you can see that, we have a few things happening here. We also still have this trend line off of this high from back here. I've just removed it because it just gets too messy with this on here. But ultimately, I think for the DXY to climb higher, it's going to have to get above this high from back here, these lows through here, and these recent highs. So right around 107.2, the more convincing, the better. You can see where so far it is serving as resistance a little bit here. But this move, guys, today is exactly what I've alluded to over the past week, where I've said that this price action in February, even though we were seeing the market pull back, right? You can see down here, it did start to get squeezed based on these lows back here and these recent highs. All right, so this move is exactly what I've been talking about. This is why you had to be careful, because US dollar shorts got themselves in trouble based on this price action getting squeezed through here. We're seeing the move back there toward resistance. So again, I think if we see the US dollar close today or this week above this area, and again, the more convincing, the better. I would prefer to see the market actually get above areas like this back here. Okay, so even this most recent high, I would love to see it get above this area, going all the way up toward about 107.4 to really convince me that the DXY is back here within this range. But if we do get that, okay, then in March, we could see the DXY here come up here and fill in weekly upper wicks like this one right back here. So what you'll notice is that on this weekly candle, we have this upper wick, and notice how the very next week, okay, we got the open through here. It came up, tested the open from the previous week, and never filled in this wick. So if we get the DXY, again, reclaiming areas like this through here on the weekly, then it becomes pretty clear, in my opinion, that we are probably going to get a move back there toward the 109 area, which of course would be bearish for the euro and the pound, right? So, pretty clear cut. That's, really it for the DXY. There's really no reason to make it more complicated than it is. But we are getting that relief rally here from the DXY. Now, it doesn't mean that we can't see lower from the US dollar. It doesn't mean that this is the bottom, right? Because again, this is still going to be resistance for the DXY. Furthermore, there's no guarantee in these markets right now, especially that we are going to see this market move higher. We could still get that rotation lower down there toward that 106 area or below, right? To fill in this, wick down here, right? So I'm not fully convinced right now. However, at the same time, guys, I would not be shorting the US dollar on this move right here, given what we're seeing from everything from the stock market to the euro to the pound and even the Australian dollar days ago. All right, we talked about this here. This isn't what the video is about, but I did want to cover it because we talked about this earlier in the week. And as you guys know, I was shorting this. Okay, I was shorting this through here on this trend line. Now, a lot of people disagree with me on this. I was shorting through here, and this is currently up well over 100 pips. Okay, I'm still short here. I did take some profit down here in this area just before the CPI out of Australia. But a lot of people disagree with me with this. You look on social media, there were a lot of not so nice comments about this, but so far it's playing out really nicely, guys. And you can see here, the whole reason I shorted this, I was looking to short this, is because, again, you can see where this level right here, going back to December, right? This level off of these highs, you can see where we got the close above, close back below, retest as new resistance. This right here, guys, this right here is a buy side fake out, and it is a bearish pattern. This right here, the close below, levels like 633, okay, that we also talked about, this is also bearish. This also confirms a larger buy side fake out. Now, a lot of times when you get patterns like this, you do get an extended move in the opposite direction. And I think that's probably what we're going to get here from the Australian dollar. All right. And the reason I'm showing you this is because this was actually well ahead of the euro and the pound by days. Okay. We were seeing this market do this here. This candle that failed was last Friday. So last week, this market was signaling potential weakness across the majors, for the euro, the pound, and strength for the US dollar. Now, it took some time for that to play out via the DXY and the euro and the pound. But ultimately, my point here is that this was kind of the canary in the coal mine, if you will. It was the red flag that we could see some of these markets start to rotate lower. All right. And again, I am still short this market. It is well in profit over 100 pips, as is my S&P short that I put on last week that I talked about in the weekly forecast as well. So it's been a really nice trading week, a very profitable trading week. I have shared all of these with VIP members, guys. So again, if you do want to see my trades in real time, get 2 VIP only videos every single week on multiple markets, including crypto and stocks, get full access to Discord, and also get complete access to the course. Be sure to check out the link in the description of this video, or if you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again in tomorrow's weekly forecast.